Hey all, Tom Weller here from forexreviews.info. In this video I wanted to quickly go over Fibonacci once again. Now I did a video on this probably about a couple of months ago on Fibonacci retracements and you guys really loved it and really digged it. If you haven't watched it and this is the first time you're watching this video on Fibonacci, then I highly recommend jumping over to the link that's just on this video. I'll just leave on this video. You can go visit it and watch that video. It talks about how to use Fibonacci retracements. In particular, just to give it a bit of a recap, in between the 50 and the 61.8 is usually a really good retracement zone in an uptrend. Okay, now here I'll just show you this. This is a recent move on the Euro US. Right, and as you can see, it came down to 61.8 in this Fibonacci area, and then it rocketed up. All right, so now you can go through the charts and actually look at that in many different trending formations, and you can see that that actually is a common retracement zone. Let's have a look at one more. We had this major move up here, and this one actually ended up being the 38.2 lined up here, and that was an exceedingly large move. Right? Let's have a look at another one. Let's have a look at this one here. Okay, and like I said, between the 50 and the 61.8 is the golden number, but as you can see, it sometimes just doesn't get to the 50%. Let's have a look at another one. Between here and this low, that one lined up really nicely to the 78.6, but also the 61.8. And there you go, in between the 50 and the 61.8 on that move. And if you go and do some back testing, you'll see that usually between the 50 and the 61.8 is a really high probability area for when you're trading an uptrend and the market starts retracing, where the buyers are most likely to get in. Now it's important to also look to the left and just see if structure lines up to that area. Sometimes you'll find that the 38.2 and will line up better, so that's sometimes where the buyers will get in that circumstance. Now, so this video is not focused so much on the retracement. If you want to find out more about the retracements, then yeah, go visit my link and you can watch it. Visit my other video. In this video, what I wanted to go over was, say you're trading the trend and you want to know where to take profit once the trade has broken the highs. All right. So let's look at this recent move on the Euro US. Okay. And yeah. As a common thing, you know, I commonly get asked what is Fibonacci a lot. I'm not going to get into the details. You can go read a book on it. You know, the thing is, what you need to know is that it works in Forex. So that's all you really need to know. Because it works, it's a good tool that you can use in addition to using price action and structure and everything like that. You don't have to obsess about it. It's just a tool. It's not going to make you the perfect trader in the world. Okay, so you just got to remember it's a tool. So when you're looking for high probability areas to get out when you're in profit, or where to get in a trend when it's moving, like say a bull trend, then Fibonacci tool can really help give you that extra confidence when looking at structure, looking to the left, looking for price action, and then it can help you make some really serious, really good money in the Forex market. Okay, so but in a situation where, say, the market is breaking the highs, let's look left on this one. So see, this is the 100% retrace, right? See, look here to the left. It was 135.64. So a lot of traders would have been watching this area for a possible up to here and then a pullback, right? Which it did just recently. Okay, but once it breaks above, say you're holding a buy trade, say you did buy down here or buy here, and you're holding a trade and it's breaking above, where do you want to think about getting out? Well, you have some options. You've got the 123.6. This is the Fibonacci tool when you're using it from naught to the, and these are areas where you know the market can sometimes come up to. And you've got the 138.2, which is up here, and you've got the 1.5, which is 1.5 times the move, and you've got the 61.8, which is a very common one as well. Okay. So let's have a look at this one. What this pair did was, when this broke out, look, the pair actually turned around exactly to the dot at the 123.6. All right. So we can see that traders were taking profit at the 123.6 here. All right. So whether it's a bank, institution, or retail traders, who knows? Okay, but that's what the big traders were doing. Now, when it broke above here, right? So we pulled this up to here because this is now the low, right? And we pulled this one up to here because this was now the recent high, right? So that now we got it as an extension, right? We now look, where is the 123? 123.6. We're now finding weakness at the 123.6 area again on the Euro US. In fact, it went all the way to 138.2. You could almost put in a case to say that it basically, oh, let's see, just need to pull that down to the pin there. Let me zoom in so you can see it a bit more in detail, I guess, guys. And so basically, if you opened a buy trade here and you saw it come up here, instead of taking profit here, you could see what the price is going to do, and it actually broke out, right, guys? And you'd be thinking, okay, where do I take profit, right? Where do I take profit? Now you can just do what I mentioned before in previous videos, where you just lock in below the previous candles. Like so, as this candle here, this is a pin bar candle, so you just pull your stop up just below here, right? And so that if the market breaks below the previous candle, it takes you out. Or you can use a Fibonacci extension tool, as you can see here, and you can look at levels such as the 123.6, which is a very common one, or the 138.2, which is just as common. These between this area and the 1.5. In fact, let me draw that in. Right, you see this? It went right to this zone, right? And it's not coincidence that market pulls back at these areas. Like I said, Fibonacci has a way of measuring psychology. And so it's a tool, you know, and a lot of traders respect it. So it's always a good tool to use in conjunction with other tools in trading. So as you can see, this time it basically found weakness at the 138.2 area, which is basically like saying 38.2% past the 100% move back to the high. Okay, this is the 23.6% move past the high. This is the 50% move past the high, and as you can see, this is the high probability area for a turnaround in between the 1.5, right? It's either the 138.2, right, or the 1.5, or the 1.6. Now, if you want to be a bit conservative, you can just wait for the 1.5 to the 161.8 zone, which is similar to looking for a retracement in a buy zone. Sometimes this can give opportunities to sell if we get some good price action up here. Now, if you want to be just trading the trend, which I understand, guys, trend trading is a lot more safer. Then you just don't use the extensions for trading. But if you do see some nice weakness up here, right, around the 1.5 to the 161.8, most likely the market will pull back to structure, right back to the 100% now, or at least the 100% sort of zone, and then it'll either pull back a little bit further right into the structure, and then it'll take off again in that direction. Or, like I said, if you've actually managed to pull off a nice counter trend trade, you might actually get a bigger move on the market. However, I just wanted to show you these areas where it's really highly probable that you should be taking profit, because a lot of other traders will be taking profit, and that is usually around the to be safe, around the 1.2360. As you can see, this one did this one exactly when we looked in the past, or the 1.382 or the 1.5. Okay, so now that I've gone over that, I wanted to show you one more thing as well. We call these legs, these extension lens in uptrends, we call them outside return legs, and the reason being is because it's the extension that goes beyond the move, and it's basically the market pushing through to higher levels. So basically, this is an extension leg, right? And as you can see, I've got the Fibonacci extension leg here, and I've lined it up. It lined up perfect to the 138.2, and as you can see, if you'd sold right here, basing your movement off the previous move. The market is very predictable, guys. Like I said before in many videos before, the market will tend to move the amount of pips that the previous leg was. As you can see, this is 108 pips, which is what the market just did exactly. And now the market is selling. So if the market sells off down to here, let's say it sells off back to the structure, which is about 135, about the 135.60 area now. If it's gonna, that's an area where it could possibly print another bullish move. And like I said, if it doesn't, just take a small loss, guys. Like, wait for price action. If you get some nice bullish price action around here, enter the trade, place your stop below the price action or below the previous low. Okay, so as an example, if someone had entered a sell trade here, you would be now up about 12 pips. But as you can see, it pin barred perfectly right at that zone. So I just wanted to show you where, you know, the traders are actually taking profit, how to use this extension. Like I said, this is just a tool, guys, so it doesn't work perfectly every time. And it also works best if you can actually line up structure with it as well. Like I mentioned with the retracement, you know, the retracements for getting in. So this is actually a tool that you can use to actually work out where to get out, you know. So as an example, you see you did a buy trade here. All right, you've got this nice engulfing candle here, or this one here. Let's say this one's this really good one, around 130, just around the bottom of 135. And you took it up to the 123.6. Like you were thinking about getting out here, but you didn't. You held on, waiting for a bit more weakness to get out, but it actually ended up pushing up higher. So around the, you could have taken 77 pips around the 123.6, or you could have taken 89 pips around the 138.2, right? But this is like a good respected area, the 123.6, because that's what it respected in the previous extension. So, and like I said, the market usually repeats itself over and over again from the previous move until eventually it produces a larger leg down or a larger leg up, or at least, or until the market actually breaks the lows and actually changes into a downtrend, and we start using it in the opposite way. Okay, so that's a bit about how to use extensions, guys. I was just showing you these recent moves. As you can see, that in the recent moves on the Euro US, the 123.6 has been a good extension area. In some markets, it can actually be, like I said, there can be the 132.38.2 or even the 150 or 161.8. Okay, so I hope you've enjoyed this video. Really appreciate your likes or anything, like, you know, your comments on the video, anything like that, guys. Like I said, if you have a bit of free time, jump over to my site, www.forexreviews.info, and I'll speak again soon. Okay, thanks for watching, guys. Okay, bye for now.